thank you very much, Noemi, for the introduction and for the presentation. As Noemi told very well, I will try to give a conceptual introduction of, a very known concept that is the one of money laundering, but also, like a mirroring concept that is money laundering. And we will try to apply, like this dichotomy between money laundering and money laundering to a case of grand corruption that is the Odebrecht case under Lava Jato investigation. So first of all, I'm trying to give like a short introduction of the topic. Of course, I've worked together with my friend and colleague David Youngsis on the topic. We have published this piece of paper in 2024, like turning legally obtained resources into illegal payments, a money laundering scheme. This is already giving you the idea of what we are discussing and what is the relation with the concept, the much more known and usually used concept of money laundering. So first of all, what we are discussing here today is basically the convergence between corruption on one side and white-collar financial crimes on the other. We have a very relevant role for the global financial infrastructure, and the aim of both, of course, money laundering and money laundering is the one of making financial resources difficult to trace and track back to their origin and destination. As I was telling you before, like money laundering and money laundering are a sort of mirror phenomenon. On one side, with money laundering, we mean, of course, schemes or systems that are used to launder money that are dirty into the legitimate economy. But of course, what we are lacking a little bit is a sort of conceptualization of the opposite kind of mechanism. So it's basically using, and transforming money that is clean, basically, that are legally obtained into something dirty and available for illicit purposes. What we will try to do exactly is try to understand, by using a conceptualization effort and also, like the application to a concrete case study, this sort of dichotomy between money laundering and money laundering. As I told you, like it exists a literature on the topic. We go back to the Masciandaro, Compen, and also Costa and Youngsis, of course. That's a little bit like the background for the concept, for the elaboration of the concept of money laundering. So what I can preliminarily tell you, like that basically money laundering and money laundering are based on very similar principles, but they are still two conceptually different phenomena. Both aim to disguise origin, movement, and destination of financial resources, and both operate on a similar infrastructure and strategy, like using accounting knowledge, relying on systematically on the banking and offshore system, and so far and so on. But what I would like to try is not just to show, like the similarity, the differences, but also take you through a sort of historical introduction, how the money laundering rather than the money laundering concept has developed. So basically, just go back to the very basic ground, so we have the definition, of course, we are political scientists, we love defining concept, mechanism, behavior, and of course, we found a sort of difference in defining money laundering and money laundering. On one side, money laundering is about using resources that have been gained, from honest operations, honest activities to finance criminal activities or criminal strategies. So this is why, like this part of the title of the paper that I wrote together with David is about, turning legally obtained financial resources into illegal funds. So, we can use money laundering schemes to create the condition for a crime. And this crime can be, of course, producing a bribe, we have we can have the example of a business conglomerate that withdraws financial resources from its balance sheet to create bribes, or in another situation, and this was when and where the money laundering term was originally created, converting clean money into terrorism financing. On the other side, we have something that is very well known, everyone is speaking about, is of course money laundering. Like money laundering is about reintroducing profits from criminal activities into legitimate economies. We have many different types of predicated offense coming with money laundering, organized crime, frauds, tax evasion, environmental crimes, illicit trafficking, and why not, even corruption, of course. The predicated offense are the origin, the source of the dirty money that is laundered back into the legal economy. So this can be, these two squares can be a sort of map, conceptual map for us to understand, the basic definition of money laundering and money dirtying. As I told you before, the initial characterization of money dirtying mechanism was very much influenced by the geopolitical focus that there was, characterizing the years, the time when the concept was made and was created. We are at the early 2000s. After the 9/11 attack, there was a strong emphasis and attention on terrorism and terrorism financing. Of course, we know we had this Al-Qaeda organization, Tora Bora, like in Afghanistan was a sort of headquarters, but no less, we had financing flows entering and arriving and supporting the activities, not just in Afghanistan, but globally. In fact, they were able to organize the 9/11 attack against the World Trade Center. So when, this money dirtying concept was conceptualized, was defined, we had a strong emphasis on the potential transaction costs that were associated with using advanced financial flows. Because, like for those relying and using on money dirtying for terrorism financing, the risk, to be detected, that, of revealing the activities for financing terrorism through global financial infrastructure was representing a high risk, of course. So in this case, money dirtying responded to the need for secrecy among those involved in terrorism and terroristic organization. In this case, and this sort of geopolitical condition, geopolitical environment, of course, gave a different nuance to the term of money laundering and money dirtying. Based on different accounting practices, they were differing, like on the degree of financial sophistication, with money laundering very much sophisticated mechanism, while money dirtying was considered not so sophisticated in terms of accounting practices, using bank account, and so far and so on. There was also a different goal, of course, like for terroristic organization, the primary objective of money dirtying activities was to create the condition, not of course for wealth accumulation, but for the undermining of Western political economic system and achieving other political goals, like, for example, destabilizing regimes that were too close to the United States, UK, or global North countries. So basically, they were a sort of organizations exploiting, Western financial system like bank, financial, accounting, and so far and so on, in a quite archaic manner. And of course, like they had the goal to safeguarding the transactions by avoiding online footprints, financial record keeping. And in this context, accounting expertise was playing a sort of negligible role if compared, of course, to like what we will see later. So Compen came to this sort of consideration that while accounting and sophisticated mechanism of accounting was, of course, essential and very important for money laundering schemes, these kind of strategies and accounting mechanisms were almost non-existent in money dirtying operations. Of course, here we are speaking about the application, and I repeat once again, the application of the term money dirtying to terrorism financing. And this is where, this concept came to light and started to be used. So when moving, to corruption, David and I, we needed, of course, to use a term and to adopt a term to explain some mechanism that we were identifying in the evidence. And we went back basically to the literature to recover the money dirtying concept and applying it to corruption. But of course, when shifting from terrorism financing to corruption and overall, the case study that I will disclose later, there were huge difference in how the two money dirtying concept were conceptualized. And this was like in 20 years. So, like from terrorism financing to corruption, we had many differences. So the point was that, of course, both anecdotal and empirical evidence confirmed us the need for fine-tuning and recalibrating the concept of money dirtying for the dimension of economic crime. Of course, secrecy remains very important for money dirtying schemes. Money dirtying is used for covering a bribe, but not for cleaning up the proceeds of a bribe scheme. So this is very important. It's the core of the difference with money laundering, and we will see it more broadly later. So, of course, we cannot say the same with the accounting systems being primitive or almost non-existent. What we have seen emerging when studying money dirtying and corruption together is, like a very sophistication and articulation of this strategy and accounting system, for example. So we applied money dirtying approach to grand corruption, where bribe and the bribing mechanism comprises a huge amount of money that are extracted from the legal business realm and paid through complicated financial infrastructure. So what we are discussing here are sophisticated, high-level bribing schemes, of course, where offshore chains, bank accounts, facilitators, and front person are very important element of the infrastructure. We had examples of these sophisticated bribing schemes. One of them, of course, is Lava Jato investigation in Brazil and Latin America. And this is where we took basically our case study, and we will unpack and analyze more broadly later. But another scheme adopting this sort of money dirtying, money laundering process is, of course, Siemens case and the Fisher Road scandal. That is a much less known, but no less very, very interesting case of corruption. And was a really interesting, even if understudied and under-considered corruption situation. So when we are, when looking at money dirtying and corruption, like the point is the adoption of the financial infrastructure for the purpose of paying bribes to secure public contracts, tenders, and forms of preferential treatment, of course. There is a different use, and this goal, mark a different use of this infrastructure from that of money laundering. And one of the most important differences is, of course, the purpose of the schemes. I already anticipated earlier. When discussing money laundering, it's about cleaning up money of dirty origin. So they are dirty at the beginning, and they are clean. They are usable in the legitimate economy at the end of the process. While money dirtying is about taking money that are clean and dirtying them, transforming them into a bribe, into something that is not legal anymore. So key point and the very interesting point in understanding money laundering scheme is, like the end goal. In this case, in the case we have analyzed it and where we have focused our attention, the end goal is to pay a bribe while minimizing the risk of being caught. That, of course, this is one of the basic reasons, like for innovation, for adaptation, is about maximizing the security of the bribing scheme while minimizing the risk of being caught. And what we have seen is that this adoption of this financial infrastructure is so much intended to ensure risk minimization strategies and the maximization of security of the entire bribing scheme. So when looking at the similarities, of course, when looking at money laundering, and corruption, money laundering and corruption, many are the similarities. In the way financial infrastructure are used by money laundering and dirty schemes, we have very similar actor typologies, concealment strategies, operational spaces. So we can see that from the origin, when the money laundering term was created for describing terrorism financing, differences reduced while similarities increased, enlarged. And, the point of overlapping are more and more. We find a similar type of actor, organizer, beneficiary, people implementing money laundering, money laundering schemes. Of course, service providers are very important. We know the role of professionals. And there is a huge literature on this topic. Money transfer service providers, financial legal service providers, taxation experts, financial sector experts. They supply different kinds of services and skills, consulting and advising, registering and managing companies, acting as nominees for companies and accounts, creating counterfeit documents, acquiring assets, and steering other business operations. But at the same time, we know how relevant is this transnational dimension involving offshore financial centers and network of companies. We know this scheme often have an onshore, offshore projections. They are based on operating enterprises, small firms, shelf companies, and they are relying systematically on offshore financial centers. So what we have seen is that in complex laundering and dirty schemes, both of them, chains of offshore companies, intermediaries, service providers, and financial institutions collaborate to transfer assets and keep them concealed from law enforcement. So what's next? So we tried together with David, in fact, to apply money laundering concept to a real life case of grand corruption. And this was, of course, the Odebrecht case and its corruption scheme. So one of the most important limitations when coming to study, to analyze, to explore money laundering, corruption, but also other types of criminal behaviors, of course, the limitation in the availability of primary data, it's a relevant factor. We know that this limitation makes analysis of the processes underlying money laundering or dirty schemes or bribing schemes very challenging. It's very difficult to penetrate into how concretely these illicit schemes work because we are lacking data, primary data that tell us what is happening. I mean, judicial documents, I mean, wiretapping. But of course, we have exception, and Lava Jato case was one of these exceptions. So we had the publication of many thousands of documents from the U.S. Department, Swiss authority, but also Peruvian. Also, many other countries give publication to the documents, to the materials they had. And this for us represented as a very precious amount of primary data. So in this case, in this situation, we have been able to focus on the Odebrecht bribing scheme. So Odebrecht was basically a giant Brazilian company that was active in the oil and gas, infrastructures, building services, was a, like 1,000 employees spreading around Latin America, but also, like touching sub-Saharan Africa. And, they put together, and we will see later, a bribing scheme that was basically designed to bribe politicians and bureaucrats in 12 countries in Latin America and sub-Saharan African countries like Angola and Mozambique. So there was basically a complex and sophisticated money transfer strategy and a supporting organizational forms. So in this situation, we have the Odebrecht directors, so basically the management of Odebrecht, admitted to have paid more than 700 millions of US dollar in bribes for winning more than 100 projects in 12 countries. 3 billion of US dollar were considered the profits made because of bribe and bribing mechanism. So the original investigation started in 2009, was a money laundering scheme involving a car wash company, but this then exploded, of course, till reaching the dimension of the Lava Jato investigation, like in the 2013, 2014. And the investigation reached overall Peru in 2016, thanks to the Barata judicial collaboration. So Jorge Barata was the manager, the director of Odebrecht in Peru. We have focused on Peru because this was a very interesting case, a very interesting situation. The investigations by the Peruvian authority discovered that basically 4 former presidents of the country, Alejandro Toledo, Alan Garcia, Pedro Pablo Kuczynski, and Ollanta Humala, were involved in bribing mechanism, in corruption with Odebrecht, among the others, but many other Brazilian and Peruvian companies. So they were systematically part of the bribing scheme. So the point is here that, empirically, we have focused our attention on the illicit connection and exchange between the former Peruvian president Alejandro Toledo and the Brazilian construction company Odebrecht. So the Odebrecht group. Just to give you a short history, at the end of 2004, the people belonging to the inner circle of the President Toledo asked for a bribe of 35 million of US dollar from Odebrecht director in Peru, Jorge Barata, for basically a preferential treatment and contracts for large infrastructure projects in the country. Overall, for this Corredor Vial Interoceánica Sur Peru-Brazil, that was basically a project for an highway infrastructure connecting Peru and Brazil. So basically, 35 million of dollars are a bunch of money, as you can imagine. And, the contract, so you can imagine the dimension of the contract and the sort of profits that Odebrecht was able to make on this project. Basically, what the investigation revealed that starting from 2007, so when Alejandro Toledo handed the term as president of the country, Odebrecht and subsidiaries and offshore companies transferred more or less 20 million of US dollar to bank account and the offshore companies connected to Toledo and the people belonging to the inner circle. So here you have just a figure. This is the network I've studied together with David, and this big question was it's giving me the direction for this lecture today is what is money laundering and what is money dirtying, and how these two different concepts and these two different definitions complement each other. Just to give you some idea on the Odebrecht bribing scheme that was very sophisticated, very articulated, and very innovative for the time being. In the early 2000s, so basically Odebrecht had a sort of intergenerational change. Marcelo Odebrecht and his brother took basically the control on the company. and contributed to develop a very complex system for money transfer and bribery that was basically implementing using new practices and strategies. For example, one of the most incredible, discover or evidence was the systematic use, the establishment and systematic use of a specialized formal unit that was called the Department of Structured Operation, that was operating as a department, formal, visible to everyone, but that had as goal, as aim, the one of facilitating bribing mechanism. They were using basically a parallel accounting system, Caja dos, and basically a business architecture that was linking operative enterprises, temporary consortia, and offshore companies. Shell and shelf companies was basically used and registered in very known offshore financial centers such as Panama, Bahamas, British Virgin Islands, and Belize. There was a network of lawyers, accountants, bankers, financial intermediaries, and also informal cash exchangers, like known as doleiros, that basically everyone here had a role in managing this infrastructure that was operating at a worldwide level, so was spreading all over the globe. And then there was, of course, a part with two digital systems that were used for payment, so for keeping track of payment and internal communication. My web day that was used to oversee covert accounting, and Drowses that was used basically for communication between the Department of the Structured Operations and the various clusters, clients, politicians, and so far and so on. Across, on this scheme, there was also another very interesting part that we have tried to analyze, and was basically the creation of this sort of Peruvian cluster that was aimed to stretch even more this already long chain made between operative companies and offshores. And, there was these financial flows that were directed towards Peruvian companies that were extended Odebrecht structure. But since 2007, this Peruvian cluster intermediated transactions between Odebrecht companies. Initially was used to move resources for bribing public officials in Peru and Brazil, but then this cluster was used to transfer resources even to other regions and countries. So we have a figure of almost $30 million moving through this Peruvian cluster between 2007 and 2015. And the conformation, the shape of this Peruvian cluster was quite interesting, made by operative companies, a bunch of small firms registered in Peru, but even shell and shelf companies headquartered in offshore financial centers such as the Bahamas. So this is just to give you a very rough idea of the complexity making up the Odebrecht bribing scheme. So when coming to that, we have tried to schematize this bribing picture, and somehow, borrowing from Lewis Carroll, throw the looking glass and what Alice found there. Because, when applying money laundering concept here is just looking in front or behind a mirror, Odebrecht cluster and the processes, the mechanism that Odebrecht cluster adopted is what we have defined as money dirtying. So it's the process to take the money in the business conglomerate that are legally obtained, that are legal, per se legal, and transform them, into a bribe. So, we have the business conglomerate on one side, offshore level 1, Peruvian cluster, offshore level 2, and all a structure of support made by Odebrecht directors, the Department of Structured Operation, professionals, service providers, offshore infrastructure, the Peruvian cluster. And then, through the looking glass, on the other side, we have the Toledo cluster, made and intended for money laundering strategies. Offshore level 1, offshore level 2. I will show some evidence later. And then the politically exposed person, purchasing and acquiring, real estate, properties, funds, and so far and so on. And here we have family and kinship inner circle, long-lasting relations, personal relations, business connections, and also, once again, the support of professionals, service providers, and all offshore infrastructure. So this is just to show how the money laundering and money dirtying scheme are complementing each other, perfectly complementing each other into a big network that is the one that I've shown you at the beginning of my presentation. So this is just to give you an example, when we took the network and unpacking it in the two components of the Odebrecht cluster and Toledo cluster, you can see the different levels, the different actors, the different components of the two networks unpacked. And you can see them into the network infrastructure. So this is very interesting because what I'm describing, money dirtying, Odebrecht cluster, money laundering, Toledo cluster, is not just a conceptual term, but is mirrored so much into the empirical evidence that we have been able to connect thanks to the large amount of empirical materials that we have explored and investigated. So together with David, we have been able to track somehow what we have defined as the journey of the money in the money dirtying scheme. So, we were able to identify the origin of the money legally received for actual work, such as building roads or other infrastructure, the entry points where legal money enters the Peruvian cluster, the Peruvian cluster per se, adding confusion, adding, this process of stretching even more the chain, and then the exit point where money leaves the Peruvian cluster to enter, to another offshore company that is the entry door then, the money going towards the politically exposed person scheme and the money laundering scheme. So what I'm describing here, I know very, very briefly and shortly, but this was somehow a simplification of the journey of the resources, the money into this money dirtying scheme. And, we have studied, we have analyzed and unpacked just a small component of a huge, huge network. So just to tell you that, this kind of mechanism, this kind of infrastructure were replicated many, many times in the broader Lava Jato and Odebrecht investigation. What we have done was focusing our attention only on a specific component of the scheme, but the network was much broader than that. And of course, then, is what's happening on the other side of the mirror, when the money dirtying scheme pay a bribe, and this bribe is then laundered, of course, to permit the resources back into the legal economy. So we have the Balmer holding asset that was basically the last point of the Odebrecht infrastructure, sending funds and resources to 3 offshore companies, and then moving them towards different steps. That this was already the Alejandro Toledo money laundering scheme that, concluded with resources returning as real estate, properties, funds, finishing in the pocket of the politically exposed person and the family. So, what I tried to show you is, how we are looking at, money dirtying on one side, and money laundering on the other. What we have normally done was defining this entire chain as money laundering. And, for me, it's okay. As I was telling you before, they are very similar somehow. But, for me, somehow I think that, disclosing the differences and also the different conceptual nature of money dirtying and money laundering can help us to understand much better the reality of how this kind of mechanism, in case of grand corruption, high-level corruption, sophisticated bribing scheme, work. There is a part that is about dirtying the money, and there is another part that is laundering the money. Depending where we are standing in front of the mirror, if in front or back to the mirror, we were looking at money dirting or money laundering. So, you know, we know many of these things already. There was quite a very interesting point with Alejandro Toledo money laundering. You know, there was the systematic use of inner circle members like relatives, friends, business associates. So there was really a systematic use of expertise, social capital, that were very important in building this infrastructure for the money laundering scheme. I would like just to highlight, you know, like a little bit the difference between the management of, you know, Confiado and three offshore. So Confiado was very interesting because was basically managed indirectly from this close friend of Toledo, Joseph Maiman. And, you know, like he was having this relation 30 years long with a Swiss law firm that was basically operating as a financial intermediary between Maiman and the service providers in Panama. So the offshore company Confiado was established in Panama by a service provider that operated, of course, as a resident agent of the entity. The service provider also appointed his employees as shareholders and three other service providers as directors. But, you know, like all these actors had at all just administrative power, but no decisional power at all. These remain in the hands of the beneficiary of the offshore company that was, of course, Maiman, Toledo friends. So how the remote control of the company was? So basically, Maiman was giving direction and input through the sister. So basically giving a call to the sister, and she was communicating back, you know, like the recommendation to the law firms in Switzerland. And then in turn, these inputs and direction were sent by the Swiss law firm to the resident agent in Panama. It was then the employees and service providers executed the orders on, you know, on the administrative side of the story. So how you can see here, you know, like many times we ask ourselves how these, you know, offshore companies are managed, and, you know, unpacking the money laundering scheme of Alejandro Toledo helped us to understand how. And in this case was, you know, like to make this sort of chain between the final beneficiary and the administrative side of the story that was made by the directors, administrators sitting in Panama and managing a company. The case of other three offshore companies was a little bit different. In this case, Alejandro Toledo was involved directly in creating and also, you know, like in using the family relation for managing the company. For example, the mother-in-law was director of one of these companies. The head of the presidential security was director of another one. So the point here that, you know, like this, using people close to him and belonging to the inner circle, at the end of the day, offered the opportunity for the law enforcers, for the investigators to understand, you know, that there was suspicious connection between this offshore and the former president, Alejandro Toledo. So this was basically a mistake that he did strategically, you know, like to appoint people directly related to him, rather than using, you know, the same mechanism that Maiman and Toledo used for the other, for Confiado, that was basically a indirect control on the offshore and on this business infrastructure. So this is, you know, like was the empirical analysis that we have done, and we were, of course, coming to empirical findings. So what we tried to understand was basically that dirting scheme, you know, like was used to bribe public officials and politically exposed persons and contributed to create redundancy, confusion, and obfuscation. So it was a strategy adopted to make much more difficult to track back origin and destination of the financial flows. We have seen, of course, emerging very critical differences with the concept originally defined. So a recalibration of the money dirting term was needed because there were much more similarities with money laundering than originally created. Of course, money dirting, when applied to corruption, lose the destructive purpose to gain a predatory motivation. Need for secrecy remain relevant. Avoiding detection is a critical component of why building up such a complicated, sophisticated, and even expensive method for transferring money from one side to the other. Of course, in this case, there is the sophisticated use and abuse of the financial infrastructure and innovative technologies, and also business technology like offshore company. We have seen here Odebrecht Group operating as an innovator, creating a department of structured operation, creating a sophisticated infrastructure and architecture to move and transfer money. But all of that was based on advanced financial knowledge, professional skills, and the exploitation of all the tactics and tricks that were available. So in this case, we had also, the use of digital solution to automate and encrypt communication and accounting system. This was something very different from, how the money dirting concept was originally created. So, this has meant that we needed to recalibrate and fine tune, the differences also between money laundering and money dirting. There was a perfect knowledge of the financial infrastructure and accounting practices. This was not the case, with the term money dirting applied to terrorism financing, a high level of professionalization with the support of service providers, enabler, and a very sophisticated use of financial solution and contract management. And there was also convergence with money laundering, accounting practices and the strategies for managing fictitious contracts, use of enablers and professional skills, offshore financial center and offshore companies, long financial chains linking domestic and foreign jurisdiction. Critical actors were very similar in terms of service provider. So what remained to us, what was the big difference between money laundering and money dirting? At the end of the day, apparently, was the objective, the goals, the aim of money dirting and money laundering. While money laundering aims to return illicit profits to the legitimate economy, money dirting aims to transform legal money into something illegal, such as a bribe or terrorism financing. So this was basically one of the key, conclusion of the analysis that we have done. All this strategy served for making the chain longer, the financial transaction even more difficult to be traced. There were, further processes of confusion and obfuscation that was created by balancing financial resources. We have seen the creativity of corrupt innovators who continues looking for new processes, new strategies to make the detection of criminal behavior more difficult. And it was important, the parallel use of traditional social organization, including family, kinship ties, informal market actors, together with the operation made on the advanced financial infrastructure. So there was a sort of combination of advanced and more primitive solution. So this infrastructure that I've tried to describe helped the Odebrecht Group to keep its illicit money transfer scheme one step ahead of law enforcement and investigator for a very long period of time. And even when Lava Jato investigation started, Odebrecht Group was convinced to be able to keep it secret, to keep it concealed by the investigation. At the end of the day, this failed. But, the elaboration, the sophistication, the articulation of the scheme, including money dirting strategies that I've tried to describe you today, this was a sort of insurance for them to stay safe against the activity of law enforcers and investigators. So thanks a lot for your attention. If you have any question, please drop an email or, of course, use the question and answer opportunity for asking.